Well, welcome along to Zoopla's spectacular headquarters here in London, and I'm so delighted to be joined by Richard Donnell, who is Director of Research here at Zoopla. And Richard, it's so good to finally come and see this incredible building, and it's such a buzz here. And of course, it's fantastic to be able to talk to you about the property market. You've got so many insights from all the data you collect via Zoopla. So I guess going straight into quite a tough question, do you still think residential property is a good investment?
I think there's certainly still a case for people buying and holding residential property as part of a balanced portfolio. I think people have just got to focus in on, well, what's this property? What do they want out of their investment? You know, do they want capital growth? Do they want to? Are they interested in the income and the cash flow from property? And I think it's everyone's situation is different. I think the main difference between investing now, looking forward, and in history is that, you know, house price growth is going to be kind of much lower. For the last 10, 20 years, house prices have been rising at, say, on average 8% per year nominal. That's going to be much lower moving forward, and that has a bit of an impact on sort of how you think about what that investment's going to deliver you.
No, I agree, and it's interesting because, as you mentioned, landlords like myself that have been in the sector for many, many years, we've had certain conditions that we've enjoyed for the past 15 or so years. But new landlords coming to it today, it's such a different landscape. They're starting with a whole new set of things that they have to consider. And I liked it when we were speaking earlier. You said that landlords are recalibrating. I think that's such a good way to explain what landlords are going to have to do.
That's right. I think, as I say, because of the changing sort of dynamics of what's going to drive the return and the performance of your property you rent out, and as you focus more on the cash flow. But again, you know, we know from the recent government survey, the landlord survey, 40% of landlords are seeing their investment in property as a pension. And what do you want from a pension? You either want a lump sum at the end of it, or you want an ongoing cash flow to sort of supplement your living costs. And I think what residential property delivers particularly is that regular cash flow, assuming you end up with a property with no mortgage or debt against the property. But again, we know a lot of landlords buy with cash. There's also as many landlords are buying with cash as there are with a mortgage. So again, it's people thinking about, why am I doing this? What do I want out of this? And I think the cash flow side is something I think people are going to focus on a lot more.
I think you're right. They're going to have to. And of course, if you have good cash flow, you can stay in the game long enough to hopefully benefit from some capital growth if there is some down the line. At Zoopla, you have so many kind of data insights. And, you know, as a landlord, I use Zoopla on a regular basis, you know, looking at comparables and so on. And it really is a useful tool for landlords, isn't it? How do you think landlords can kind of best use Zoopla for their research?
Well, I think as well as having a lot of properties, I mean, we're very strong in the lettings market generally as a business. I think it's all the information around property. You know, it's what can I get for my money, what's sold, what's happened to house prices, what are rent levels on a property basis. I think, you know, as a website, you can find a huge amount about property and trends. I think we as a research team working with our colleagues, we're going to be trying to sort of get more of that data that we've got to push that out there to sort of better inform the sort of market of what's going on. So it's very much about research, browsing properties, having alerts. You know, if you would like to buy a 2-bed flat in a certain town in a certain price range, then obviously, you know, people have alerts and they can see what's coming and chat to agents about what the opportunity and the potential rental value of that property is.
And of course, photographs on portals and for both sales and letting are absolutely the most important tool. But also I think landlords can learn a lot from looking at the photos of the property as well. They can see the condition, they can see if perhaps it's empty, which suggests that the vendor might be motivated. So there's so much you can take away from it. Yeah,
many signals, and you know, and again, we have got a lot of data on there already, but I think there's even more to be done. Again, very recently we launched an analysis of where are the best value for money rental markets for tenants in London. And again, but landlords would find that kind of information useful, which is kind of where's got the potential for rents to increase. Comes back to this point about, you know, rather than focusing on house price growth, focusing on kind of where can rents increase the most, should I be buying properties in those areas? And obviously you have your sales side and your letting side. Would you say that you're particularly strong on the letting side compared to other portals? Yeah, we certainly deliver a lot of leads from tenants to agents, and you know, we're particularly strong in London, the southeast of England. But I think it's and the interesting thing as well about tenants is 80% of first-time buyers come out of the rental market, so there's this really close link between the sales market and the lettings market, and the lettings market's really important. I think it's sort of underrated. I mean, there's more moves a year in the lettings market than there are sales in the sales market, so I think it's a very liquid, very diverse market. Tenants are moving every 4 years on average at the moment. It's a really interesting market with a lot of demand, both from landlords and from renters looking for property.
Now, you're a landlord yourself, and what is your view of the government changes that have we say have been hammering landlords over maybe the last 5 years or so? Obviously, the government is looking to professionalise the sector, but has it gone too far?
Well, I'm an accidental landlord, but like I guess many of your listeners. Look, I think what the government's been trying to do, I think there's a lot of change has been happening in policy, reductions in people's ability to put money into their own private pension schemes. And the more you stop people putting money into pension schemes, they'll look for other places to put money, and that could be property. And so then they introduced the stamp duty change, and then the tax relief changes. Very much, again, the view was to sort of level the playing field, supposedly, with first-time buyers. So I think having more stability in the market is good. I think we've also got the changing housing market dynamic, which almost compounds some of these changes for investors and landlords. So I'm not sure they've gone too far. I don't think they should go any further. And I think, but I don't think all it's really done, as we talked about earlier, it's shifted people's assumptions about what am I going to do. It's just changing the mindset of, I guess, rather than making it look really, really attractive, it's now making people think twice about what should I do with my money? Is it property? Do I put it into an ISA? Do I put it into something else? And I think that's why we've seen the slowdown in investment. And I think some of the changes, particularly around mortgage tax relief, have led some landlords with portfolios with quite a lot of debt in them, particularly in low-yielding markets like London, to do some portfolio rationalisation. So I think the sector's just sort of gone into 2 or 3 years of let's let all these changes run through, and there was a lot of changes in a short period of time. People reevaluate their portfolios, bit of uncertainty on the horizon around the near-term outlook, and then once that clears, then I say we've still got investors buying. They're just buying at a slower pace than they were buying.
So when all this kind of uncertainty is kind of cleared away, so to speak, one thing landlords hate is uncertainty. Once that's kind of moved on and we understand, the outcome of Brexit and the new government and, many landlords fearing, a Labour government and rent controls, it could be that there's pent-up demand and that a lot more landlords come back into the sector afterwards.
Yeah, no, I think there's definitely, depending what happens with Brexit, if some more certainty appears, then there's definitely going to be some pent-up demand. I still think the housing market faces some fundamental affordability factors. Whatever happens, Brexit one way or the other, yields in London and the South East remain relatively low. If you want to buy with a mortgage, you need to put more equity in. We've seen investors moving into sort of high-yielding markets. And equally, just the sheer level of prices is quite significant. And again, I think that's the thing that's really getting investors to think twice. You do need quite a lot of equity now to participate in the market, and that's a real change to 10 years ago and further afield. So, look, and it's all about individuals and what they need and, their future intentions about where do they invest their money, full stop, and the role that property plays within that.
No, I totally agree. And I think that, one thing that I always kind of try to go back to when we have these kind of discussions is the fundamentals, because the fundamentals remain the same. We have a lot of people and not enough housing stock. We don't have enough social housing. We're a small island. Nobody's making any more land. So I think when people are feeling sort of lacking perhaps a little bit in confidence to move forward, perhaps with becoming a landlord or continuing as a landlord, it's good to look back at those fundamentals, isn't it?
It is, and I think, as I say, the underlying cash flow of property, rents over the long run rise in line with earnings. Every pension investor would love an asset or something that produced cash flow that rose in line with earnings and kept up with the pace of living. So there are some strong underlying fundamentals there, but it's an expensive sector to come into at the moment, at this point, largely because mortgage rates have come down so far, and that's fed into the price of housing. So yes, fundamentals are there, but the long-term trend of rents rising in line with earnings remains.
Fantastic. Well, thank you very much for joining me here on Property Tribes TV. We've been at Zoopla headquarters, and hopefully, Richard, we're going to do some more kind of content generation with Zoopla and work a little bit more closely with you in the future. And that's something that, you know, has long been our ambition here at Property Tribes, to kind of work more closely with you.
No, it's great, and thanks for coming in today, and look forward to seeing you again soon.
Fantastic. Well, thank you very much for joining me. And if you're watching on YouTube, we do invite you to click across to propertytribes.com. That's where our discussions are hosted, and also please click notifications as well. But we're signing off here from Zoopla headquarters in London, and I hope you've enjoyed our chat. Thank you very much, Richard.